Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay guys, let's take a look again in the gold market. It's not really a lot of events have passed since our recent discussion, and if we we'll talk a couple of words on the gold market in general. So the problem, the major trickiness of the gold market stands in recent market behavior, because from the one point of view, we have some bullish setups here in the recent bullish price behavior, but on the opposite side stands that most analysts not quite believe in this upside action, and the fundamental data also doesn't confirm this bullish shifting. Because yes, we have seen that here we've got the closing of the short position, but right now we do not see any increasing of the real purchases. We do not see any growth in SPDR fund storages. We do not see really big changes in the CFTC report. So we do not see anything that usually should appear and confirm the recent changes on the market. That normally should accompany to the changes that we see right now, and that really makes investors nervous, and they are not hurried to change their opinion and to start to think that gold is entering in some bullish stage of its life and some cycle. Besides, soon we will get the end point of a seasonal bullish trend that normally should finish in February. That's also not very supportive factor for the gold. But despite all this suspicious, following pure technical picture, we see that gold holds with the reverse head and shoulders pattern, and it's continuing to form it, and it holds above the crucial levels. So here we recall that we have started to doubt and talk about that market looks suspicious, not very strong. That's this behavior and this sell-offs that has led market right to this major and crucial area was really strong, and hardly market will be able to rebound here and to jump up from this level and to keep the intrigue, keep the thrilling of this pattern. Probably it should fail and continue move lower, but take a look, this hasn't happened. Despite that the market really thin right now, despite that the main investors right now take the rest and enjoy the holidays, market has bounced up from the crucial area, and following by letter, it just keeps the normal shape of the hand shoulders pattern, because this upside action has started right at the moment where it should start. And market hasn't spent a lot of time around this area. It was not too much consolidation, just a couple of days, and after that it has started move up. So despite of on all our suspicious and some really suspicious that we have no really drastic action, would not have really fast acceleration to the upside, not see any supports from the fundamental data, from the sentiment, investor sentiment data. Despite all these moments, market keeps the perfect shape of the head and shoulders pattern, and in fact, this is the setup that we only have. Currently, we do not have normal strong bearish setup. If we do not believe much in this setup, we can ignore it, but it's better to not take any position in opposite direction, because in fact, guys, we do not have much choice here. We can only either follow this setup or just ignore it, because we can't take the bearish position right now just because we don't have any reasons for that. So from that standpoint, let's take a look at this possible head and shoulders pattern. Concerning possible target, we already have discussed that this will be somewhere around 1275 area, 1260, so somewhere in this area. So will be the destination point of this pattern if it will work. The first invalidation point stands right here, right at the bottom of the shoulder. Because if market will take it out of this bottom, the next destination point right here, 1130 lows. It's right here. Because when the market fails at the shoulder, the next destination usually becomes the bottom of the head pattern. Well, on the 4-hour time frame chart, we also see some bullish signs, but it's very difficult to say whether they will be confirmed when the major investors will return right back on the market. But right now it looks like the bullish moments, because market by this retracement down, you can see that the ugly head and shoulders pattern that we have discussed on previous week in reality has worked nice. So you can see that market has completed this target from this A, B, C top, D pattern. Pips to pips has been completed. Right, what's more interesting, that was also an agreement, because this target has been completed right at the fib support on the daily chart. So in fact, we have the agreement. The market has turned to the upside. Okay, and also market has completed. Take a look at this harmonic swing. So that's the swing that has appeared on the market on the non-farm payrolls release, and currently market just has repeated this retracement. Second step that market has done is take a look. Market has returned back above the neckline of this head and shoulders pattern. If we suggest that market really is bearish, we could say that this pattern probably should become the reversal pattern. The market should follow this pattern as the reason, as the triggering pattern for downward continuation to the next bearish target. If we would suggest that this pattern, that market is still bearish, it's probably should use this pattern and reestablish move down. But this has not happened. You can see that yes, market has shown normal action following this pattern, but it has shown just the minimal target and returned it back up. So the fact that market has returned right above the neckline of this pattern, and the really short-term character of this pattern makes us think that the upside continuation seems not as impossible as it has seemed previously. So some upside action market really could show. And for taking the bearish, some bearish pattern, bearish position, we need to see some failure of this upward action. And the first one could happen only if market will take it out of this loss. That's why, guys, since we do not have any other setups here in the gold market, let's discuss how we could trade current setup. So we have estimated the invalidation point for this short-term setup that stands right here at this lows, 1170. Now, if we take a look at the hourly chart, you'll see that do not pay attention to this gap. That's probably some Alperi UK bugs, because our forum members said that they do not have this gap. Anyway, that's really not big deal, because we're mostly interested with this situation here. So our major task is to get as better possible entry area that will minimize our potential loss. And from that standpoint, we probably could think about the 1180 618 support. This level also seems attractive because this is 1190 fib support that is accompanied by the weekly pivot point. But as market stands really choppy in the recent time, okay, this were big deep retracements, I can't exclude that market really could show this retracement down. And the market, recall that market will be still thin at the eve of the New Year's day. So that's why the deep retracement really could happen. That will give us the minimal loss potential for if the setup will fail. And this setup, the invalidation point, as we said, right here. So gold market, we know that gold market likes to retest previous tops and bottoms. And from that standpoint, this level seems interesting because take a look, that was the previous top. So market then the retracement, return back down, break through it, it could retest it. So that's why I think that this level is not as impossible as it seems on this picture. It's really market could show retracement right to this area. Since this setup looks not very tremendous, not really fascinating and thrilling, I think that we should not take additional risk for trying to take this setup at any cost. It's better to minimize the potential losses. If we will not get the chance to take the long based on this setup, well, that's okay. Then we will search for another one. But I don't think that we should take the too high bet on this setup that's by itself not really a very good looking. Let's call it in this way. So how market could start retracement down? Potentially it could be the butterfly, could be formed as a reversal pattern, but I also can't exclude that market really could start move down right here, because if we'll take a look at this pattern, A, B, C bottom, you will see that 1618 extension stands precisely in this area. So market already has completed this ABCD target, and theoretically it has not much reasons to show another small spike up. But still, this could happen, and if we will get the butterfly, all the better. So, that being said, on the gold market situation is a bit difficult, because from the one point of view, the setup that market now shows us, now it has, when the market looks not very attractive, not very superb, because it is not confirmed by some fundamental data, some changing in the sentiment of the market participants. That's why it should be treated and looked with the suspicious. At the same time, we do not have any other setups. We can't take the bearish position right now. That's why, guys, I think by yourself. So we have just discussed how you could trade this setup if you would like to. But you also could ignore it because it's not really very fascinating. If you still would like to take it, it's better to wait for the deeper retracement just to minimize the potential loss, because market will still thin, and anything could happen on the thin market.